and stocks that are on the editor's radar. Let's find out and discuss them in great detail. Well, in today's trading session, we're talking about United Breweries and Shriram Transport. Let's begin then with United Breweries. It's in the spotlight in trade as now the CEO, Rishi Pardal, has resigned. He's been associated with the company since the year 2020, and for the past 10 quarters as well, he's been associated. And Nikunj, the average volume recovery as well that we've seen has been at about 90% since pre-COVID.
Yeah, I think Mr. Damani just spoke about investing in liquor stocks. And here's one company to give you, just for the benefit of our viewers, United Breweries has the Kingfisher brand. They represent the beer business. They're the largest beer company in India. Hot summer kicking in early, but the beer business is not getting back to its peak. That's because the beer business is now getting challenged because of new disruptors and microbreweries, at least in some of the metros. Bottom line here is the stock has not lived up to the expectation. Second, the change of CEO. Is it compulsion or is it by choice? When you have a change of CEO just after 10 quarters, it just makes you wonder that is the management now pretty much endorsing that things have not really worked well for the company and they really need to change there? If yes, why have they not worked? It's a stock which has underperformed. It's a stock which has really fallen off the radar. And when you typically get a news like this, it's just going to make you wonder why. It's been an underperforming stock which frankly is losing market share for a category which was always supposed to grow. And you can talk about summer kicking in early. We did a discussion last week that summer is early, so more AC sales. Well, if summer's coming in early, apart from cola, beer will also sell, but that's not happening.
Yeah, and we just saw those absolutely flat returns on United Breweries, so this will definitely remain in the spotlight. Now let's move on and talk about Shriram Finance. It's on the brokerage radar in today's trading session, as well as we've got Morgan Stanley that's come out with their latest note. They've maintained an overweight rating. They've got a target price at about 1580 rupees. They're talking about strong fundamentals as well, saying Q3 surprised, and there have been a lot of revisions as well.
Yeah, Awan, the fundamentals have improved for Shriram Transport, but the discount between the peer set and Shriram Transport has only increased. That the company is delivering, and if post the merger return ratios and book value is going to increase, it should be going higher. But why has the discount between Shriram Transport and peers has increased? I think Morgan Stanley is making that point that it's largely because of a technical factor, which is the supply, which clearly seems to be there. Like we've seen in case of Indigo, the numbers were not rewarded, even though they came out with record profits for the quarter gone by, because markets know that one of the promoter is selling. That is the case with Shriram Finance. There is a large oversupply of erstwhile investor, which is really jamming the stock from any free movement, so to speak. Now that's a technical factor. So Morgan believes that if you are one of those guys who does not think in terms of days and weeks and months and quarters, it's a stock which you can buy and hold. Like that Hero Honda ad, fill it, shut it, forget it. One of those stocks. Buy it, don't worry about the near-term volatility, because this is a business which once the technical overhang is over, the market will discover its fair value.
All right, so hold on for the long haul and forget about it. That's a word coming in on stocks on the editor's radar. Let's hear it out then from Neeraj Diwan. His top fundamental stock call is Godfrey Phillips. Why is that? Let's find out.
First 9 months, we've seen good growth, volume growth in the tobacco business domestically. And even the global business, that is the export business, has seen good growth because of good growth from the tobacco leaf business that they export. And the domestic business, which is the non-tobacco business, has also seen a 20% Y-on-Y growth in the 24/7 sales. So I think this is more because of the increase in mobility post-COVID. It's a debt-free company which has cash. If you consider the investment, it has a mutual fund. So there's no debt on the books. And the future strategy is to grow all the three businesses, the domestic tobacco business, the international tobacco business, and the non-tobacco business, as a 24/7 retail stores. So all three will see decent improvement going ahead also. So if you fairly see on valuation, even if you value it at 15 times 1 year forward, which has been the historical valuation, the stock can give you 30% return from these levels. So I have a target of 2,300 for this for 9 months, 9 to 12 months.